record income, and at bottom you can expenses. Record the mid level you can record expenses, and then at bottom of course the realized and unrealized gain portion that you can record it. And what about expenses? Expenses already we have discussed this, but yes, expense management fees, professional expenses, broker deal cost, interest expenses, or total expenses. So basically that would be P&L's debit side. All right, all expenses that we record. All expenses that we record. And what about the unrealized gain and loss? Yes, as per the accounting standard 946 22044. So 946 which represent the realized and unrealized gain or loss from investment and foreign currency. It should be recorded. So we have this where if you see the amount like positive, so it means we have profit or gain, right? So net realized gain from investment and foreign currency transaction is 2,69,000. Net change in unrealized gain and losses on investment and foreign currency transaction, again positive amount, it means we have profit. Net loss or net gain loss from investment and foreign currency transaction. Foreign currency, it means this here we were talking from a FX perspective. For FX it means forex transaction. When you convert that USD into euro, euro into INR, INR into GBP, when you convert that into different currencies, so you might see sometime losses as well. All right, and finally you can compute net income. So here how you can compute it, note down the formula. Total income, so it means plus minus expenses, whatever expenses that you have, plus gain. If you have a gain, then you can add it, minus loss, gain, expenses minus, and again income, which is plus. If you just add all of this, whatever net amount would be, if that net amount is in, let's say, negative, so that becomes loss, and if the amount is, let's say, positive, then that becomes your income. And this income you can transfer it to the, again, balance sheet, asset side, sorry, not asset side, liability side. So this is how your statements come into picture. Any question so far? We have already discussed about it, so you can refer my previous session, but this was just we were pending with the example, that's what I picked up this one. How it looks like, so you would have a question like how it looks like, so that's what we have covered, that portion. But income part we have already discussed about it. Operating expenses, other expenses, direct expenses, variable expenses, right? Your 30% accounting is around only expenses, and even in interview also you would see lots of things around your expenses only. Okay, so why income statement is important? Again, the question is, if you see question like why income statement is important, the income statement helps you to understand the true nature of what is being generated in your fund in terms of profit and loss or expenses, that you can say. Income statement summarize the fund's revenue, expenses and profitability during the quarter. It includes section for revenue sources, operating expenses and any additional income or expenses that you would see. That's why your income statement is important. Okay, so the interesting topic is now balance sheets. Can anyone would like to brief what is balance sheets, or what do you understand about balance sheets, or why balance sheet is important? Anyone would like to brief about, as per, means whatever understanding that you have, you can speak.
Balance sheet is okay.
Yeah.
Okay, please go ahead.
No, you go ahead. Yeah.
Okay. So balance sheet directly reflects all the asset, liabilities, holdings, and
Mm-hmm.
all.
Mm-hmm.
So
But
that's why it is very important to know, like, what is the current situation of a company, like, what all asset, what all liabilities
mm-hmm.
that
Okay.
and balance sheet can be like is similar to a NAV, as it includes assets and liabilities. That's why.
Not similar to, it is, see, to if you want to compute NAV, so it means without balance sheets you cannot compute NAV. Simple.
Yeah, it is.
So basically in fund business we prepare trial balance. Note it down, this one. We prepare trial balance, right? In fund business we prepare trial balance. So trial balance basically is your balance sheet only. Because under trial balance we prepare income statement or all income heads and balance it, right? If you see balance word, balance it means which is related to cash, am I right? Balance it means which is related to the cash. Sheet it means it's a statement, right? So which represent your cash position as well, like how much cash which is available at the moment in your books of account, considering, let's say, and even this will help you to manage your payables and even receivables as well. what what all you have obligations like payable, receivable, right? So that will give you more sense, and that's what we prepared balance sheets on periodic basis. But in mutual fund business we prepare it on daily basis, in hedge fund business we prepare it on monthly basis, and in private equity we prepare this one as a quarterly basis. It means every quarter we prepare balance sheets to compute the net assets value of the fund, so that we can prepare a partner's capital statement, and then we can allocate the expenses and losses to the each and every partner's account. So that's why we prepare balance sheets on a quarterly basis. And again, as I said, why we prepare it, balance it means it's a cash. So balance sheets help us to understand the net cash position which is available at the moment in the books of fund. And that's why balance sheet is important. And if you don't know, let's say, how much cash which is available, let's say for example I'm in teaching business, so most of my students, they only process half of the payment, so it means first EMI only. Let's say there are 50 students which are pending with the payment, so receivable. So how can I track them, or how would I know, it means how much amount is payable, right? And that's what your balance sheet helps you to provide aggregate value of all receivables. And same for payables as well. Let's say there are 5 other trainers who are working with me. How would I know that how much amount that, let's say, which is comes under payable, right? But your balance sheets provide you more sense to calculate or track payable and receivables, and accordingly you can even manage that as well. Payables and receivables plays crucial role in fund business as well as in normal business also. If you don't know your payables, if you don't know your receivables, then that will affect on your cash only. And that's what your cash is like oxygen. So see this ahead, how your cash is like oxygen or blood. But yes, in this session we are going to discuss about what is balance sheets, part of the balance sheets, and why balance sheet is important. See, when you talk about fund balance sheets, it's a pretty straightforward Total assets, again this one is your horizontal shape, but we have two types of balance sheets. One is T shape. In college life we would have seen T shape only, so like asset and liability side balance sheets, but in system it's become difficult, so that's what Geneva or Investran, they are not compatible for a T shape, right, but they are compatible for horizontal, and that's what we follow the this horizontal only. But see how your balance it looks like. So as I said previously also in a first session, go and just check it. Balance sheet, it means which represent the aggregate value of. Aggregate, it means you can consolidate all your investment value and then you can update it. So balance sheets represent the aggregate value of your investment. So here you might see that they have taken only one transaction, like investment in securities at fair value. So you might see here different stocks like Wipro, TCS, Infosys. Because when we record a transaction in the accounting system like Geneva, so we record line by line transactions. I'll show you that as well. So we record line by line transactions, but when we update that transactions exposure in the balance sheets, then we try to pull the aggregate value, not the each transaction value. If you pull the each transactions value, what happened, then your balance sheet looks like mess. Then you won't be able to calculate anything there. And that's what we try to get try to fetch the only aggregate value of investment. So I'll just walk you through quickly. I have an open statement of Geneva. So this is the Geneva, it's an accounting tool. See this. When we record the transactions, we record the line by line transactions. Trade date, settlement date, transaction type, ID, investment, right, custodian account, quantity, price, then profit and loss, if you see anything as such. But when we pull the investment on balance sheets, we try to take the consolidate value of all investment. So it means total investment value. So where do you see this? So total value of investment, let's say including all of this. So might be this one, total value, right, cost and market value. Then difference of this, now I can see the figure in a negative, so it means we have a loss, so that you can update your profit and loss and even balance sheets, right? But my point is, when we record transactions, we record the line by line transaction in Geneva or in record keeping system. But when we pull that data, right, so we pull the compiled or consolidated or aggregated transactions value that we pull and update on your balance sheets, and that's what you won't be able to see that if I go back and see this here. So do we have line by line transactions? No, we have just updated here total investment value, investment in securities, total investment in securities. Total means aggregated value. But when we record the transactions, of course we record the line by line transaction in the internal accounting system like Geneva, Investran or Aladdin. There are many more applications, not only this three, because each and every institutions, they have their accounting applications, and few institutions even they manage that, means this transaction in Excel as well. It's not mandate like you should have only applications, depends on the fund size. If you have a complex fund structure with the tax adjustments and all, then of course you need a system or infrastructure which can help you to track each and every transactions, so that you can ensure tax filing or other regulatory deadlines and all. But if you have a small fund, you can manage that in even Excel as well. All right, so depends on the size of the fund. But yeah, so here now you can relate So when we record the transactions, we record the one by one transactions. But when we prepare the NAV, or when we prepare the balance sheets, so we required aggregate value of all transactions and even profit as well. So it means, if you see, this one is a market value, market price, but we have cost price, which is different. Cost price minus market price. So the difference you can call it, which is as appreciation or depreciation. So that you can update in your balance sheets also, right? You can update as appreciation or maybe as a depreciation. So that's how you can update the figures or values in your balance sheets to prepare or compute net assets value of a fund. All right. Same logic you can apply it to the mutual fund, hedge fund, fund of fund, or different funds. So here we are discussing about private equity, but same logic you can apply it to all other funds as well. All right. Then cash and cash equivalents, it means whatever cash amount which is available in the bank, or again restricted cash, it means reserve, or whatever cash, let's say, which is reserve, or maybe in the different transactions account, or maybe under custody or broker account. So that amount also you need to update on your balance sheet. Then interest and dividends, total aggregated value. So if I show you as per means system how your income statement looks like. So see, income statement or income, total income. So where we have income, purchase, interest payment, accrued interest. See, this accrued interest, this one, accrued interest, total accrued interest amount is almost 33 lakhs or 33 million something, it would be around. So right, so that you need to update here aggregated value, because this report provide you with the aggregated value, right, aggregated amount, so that you can update interest and dividend receivables, whatever dividend receivables or interest receivables if you have, you can update that. Due from related parties, due, it means it's a pending, if you see any pending as such, and if you have that you can update. So your counterparties would be, let's say, buyer, seller, brokers, custodians, then banks, right, or any agency if you see in between transactions. So that those institutions comes under your counterparties or related parties transactions. And if you see any due which is pending to receive to you, so that becomes your receivable, right? Apart from that, you can also record escrow proceeds. Escrow, it means it's a transaction account. Basically, it is mandate to the institutions to create transaction account. Transaction account. So basically what happened, I'll tell you. Let's say you have a deal size of 1 million, right? But this deal will take at least a week or maybe 2 weeks to complete it out, right? But that counterparty, let's say counterparty is in US and you are in India and you don't know each other. And if you directly transfer 1 million to the party who is in US, so it means you would be in huge risk. To avoid that risk, what method we have at the moment is escrow method. Escrow, it means create a temporary bank account for that deal purpose only. Means appoint a bank, appoint bank or agent, you can say, appoint that agent, open escrow account, and that counterparty, it means, let's say if I'm a buyer, then I'll transfer that amount to the bank account, not the counterparty directly, right? And then this agent will ensure that I have received my securities in my bank account, or maybe let's say escrow account only. And then after, settlement will be executed at the same time to avoid risk. I'll confirm that yes, I have received securities, and then that seller will confirm that yes, seller has received amount. So it means if you see any amount which is pending, pending to receive to you in escrow account, so that becomes your assets, basically your current assets. All right, and then capital contributions receivable or other assets, if you see that, you can record it in the books of balance sheet. Apart from that, you can also record the liabilities as well: management fees payable, accrued expenses, capital distributions payable, and notes payable. And then if you want to calculate your net assets value, total assets minus all liabilities, so net would be your net assets, means whatever net amount would be, just do it, minus of 1,11,000, so around 92.4 lakh something, that would be your net assets, so that you can compare with your partner's capital. But yes, your balance sheet looks like this. Any question around balance sheet now? Okay, if you don't have, we'll go ahead. So what is balance sheet? Balance sheet, it means it reflects the cumulative financial position of the fund at the date of preparation. It incorporates the historical performance, capturing the results of previous periods. All right. So your balance sheets capture the input and information of historical information, including your investment data, expenses, income, then payable, receivable, or any obligations, if you see, that you can capture and evaluate it. Balance sheets provide a snapshot of the fund's financial position at a specific point in time. So it means monthly, quarterly, yearly, if you want to check that, so that information also you can verify through your balance sheets. And it shows the cumulative net worth of the fund by detailing its assets, liabilities, and equity. So if you see any question around balance sheets, so you should mention all these points in your answer. It provides snapshots or maybe highlights or maybe details of or detailing of assets or liabilities or equity, payable, receivable, right, cash position, and other things. Okay. Okay, so balance sheet, it helps you to understand what the fund owns. So it means basically that's your investments and assets, what the funds owns. And here you can add also receivables as well, whatever receivables you would see, and even gain on investment as well. So that would be like add-on. Basically that funds owns, it means fund has a ownership with assets, investment, receivables, and gains. Simple. What fund owes, it means payable, of course, all expenses which we have seen. And apart from that, how the funds has been funded, so it means basically that's your investors capital, which receives through capital call. In private equity, we received capital through capital call. We'll see that in details about capital call and all. It's just terms, so don't get confused at the moment. We are discussing about financial statements, not the private equity portion. You would see some sort of different type of discussion in private equity sessions. So that we are going to start from tomorrow. All right. So this is how your balance sheets, that different segments that you would see. One is assets and investment, another one is liabilities and payables, that you can say, and the last one is investors and capital. All right. So another example, we have how funds balance sheets looks like. See this, if you can see this, basically screen which we have. Assets, equities, market value, unrealized gain, cash position, receivable, securities sold, receivable dividend income, total assets. So it means total of all that becomes your total assets. Liabilities, forward, contracts or any unrealized loss if you see, that comes under your liabilities. Payable, so security purchase, payable expenses, basically your admin management, that other expenses comes under your payable, and totaling of all expenses, so that you can consider as funds liabilities, and of course total assets minus total liabilities, that becomes NAV. NAV for per shares we calculate in hedge fund basically, not in private equity. In private equity only we calculate this one, net assets value. So it means total assets value, not for per shares. We calculate NAV for per shares in hedge fund only, hedge fund and mutual fund. So we have basically two types of funds. One is capital commitment based funds and another one is unit based funds. Unit based funds, it means your mutual funds and hedge funds. And if I say capital or commitment based funds, it means your private equities or credit funds or real estate obligation or credit funds or loan funds. So that becomes your commitment based funds. Basically equity based funds should be your unit based funds, and loan based funds should be your commitment based funds. The reason is loans are not listed one, and that becomes difficult to calculate value of loans. So that's what we don't split that into units. All right. And of course the rule is asset is equal to liabilities plus partners capital. Let's say if you have assets of 1 lakh, so and liability of 10, so it means ultimately that affected on partners capital. The reason is partners only contribute to acquire assets, and that's what, if you received cash as a capital, we record the accounting entry like cash account debit to capital, so let's say this amount looks like initially this, because here you can record it cash and here you can record it capital. But when you have liabilities and all, so that liabilities will eat to your capital actually, and it looks like this. So you have a liability or obligation of this one, so that you can minus from your total capital. All right. So this is how your balance sheet parts come into picture, one which is assets, liabilities and partners capital. So let's see one means each one, how it is and what are the things that comes into picture. So investment, it means under investment, it represents the funds holding, including stocks, noted down this one, stocks, bonds and other investment vehicles. These are assets with the potential to generate returns. So basically private equity funds invest in such assets to generate the returns on investment. All right. So they invest it. But apart from that, you would see, wording in private equity. So that would be something different, which is LBO, leverage buyout. Then MBO, right, management buyout. But basically LBO, MBO or CLO, CDO, so that represent your bonds obligations and stocks obligations. So it means MBO, it's a transaction type, or you can say agreement type, or that investment type. So through MBO they'll invest, but basically they'll purchase the company stocks only, they'll purchase the bonds only, right? So ultimately investment will done in your stocks, bonds and loans in instruments. All right. Investment vehicle, it means you can say CLOs, collateralized loan obligations, or CDO, it means collateralized debt obligations. So basically ABS and MBS, mortgage backed securities, that comes under your CDO. And CLO, it means term loans, revolver credit, where private equity funds invest into it. So we'll see that products as well, LBO, MBO, CLO, CDO, ABS throughout the sessions. We'll have two to three sessions, dedicated sessions on private equity investment products, because those are complex ones. Those are not like simple equity, but we'll have in detailed discussion on products and their flow, how it works and all right. But yeah, so under investment you would see stocks, bonds, then other, as I said, LBO, MBO, CLO, CDO, MBS, ABS, or maybe real estate investment or assets as well. So under cash, it includes the fund's liquid assets such as cash on hand and short-term investment that can be quickly converted to cash. So it can be T-bills or any money market investment if you see, so that you can count as a cash equivalence. All right. Third point is receivables. Under receivables, you can record receivables may not be as common for funds as for operating business, but it could represent any outstanding amounts due from portfolio companies or the other entities. So basically here we are talking about accrued interest on all this investment and dividend. And recently I have seen, which is no, not for this one. So dividend interest payment and accrued interest payment. Dividend interest payment on stocks and dividend payment on stocks and accrued interest payment or interest payment on bonds and government securities, where that fund will receive and fund can record it as a receivable if it is accrued. And if fund received it, then fund can record it as an income as well, where fund has received the income of this much amount in that way. All right. Then account payable. So account payable, basically it reflects the fund's own. So it means what are the things where funds will have to pay to the investor in short term duration. It can be, let's say, 1 year, 2 months, 3 months, quarter, day. That depends on the their business nature. But payable, basically fund will have to pay it. For example, let's say tuition fees. Most of the guys, as I said, you guys have paid only 50% amount. So 50%, which is basically remaining. So for you, that remaining amounts become payable, and for me it becomes receivable. Right. So same logic you can apply it in fund business as well. So where fund managers, of course, fund manager need to make a payment to the counterparties or maybe brokers, custodians, fund accounting institutions, right? So that amount or expenses fund manager will ask you to record it as a payable if it is payable. So it means which has been accrued but yet to pay. So that becomes your payable basically. Such as service provider expenses or vendor expenses. So it means admin fees, management fees and other expenses, fund can record it as a account payable. Notes payable represent any loans or notes that the funds has taken, indicating its borrowing obligations. So in India, see, it's not allowed to take a loan and invest, but in US and UK it's common. So they can take a loan as well. Term loan or maybe revolver credit facility, or maybe they can directly approach banks to provide loan on collateral, funds collateral or securities or stocks or previous investment or ongoing investments and all. So fund can raise money through loans to mitigate their cash expenditures and all. So it's allowed in US, and that's what sometime you might see loan transaction which has been recorded on statement, like let's say balance sheets. But yeah, so as I said, that is allowed, but India they don't allow it. So we have obligations where the funds are not allowed to take a loan and invest. But in US and UK they have a free economy, capital approach. So they are allowed to do it. So they raise funds through even loan obligations as well. So there was one of the fund went bankrupt. So something Archegos something. So I'm not able to recall the exact name, but you can go and check the story of that Archegos. So that fund lost around 2.5 lakhs crore in just 2 to 3 months something. right? Why? Because that fund has a short position on few transaction and that got leaked, data got leaked, and finally that fund lost around 2.5 lakhs crore amount, and finally that fund even liquidated. It means winding up as well, right? But ultimately that fund had taken a loan from the banks to invest into it, so banks also got affected uh, due to that, let's say, insolvency or bankruptcy, right? So that happened, but in India it's not allowed. But you would see that anyways you are going to deal with US and UK funds, so you would see that notes or loans on funds balance sheets as well. Deferred revenue, it means may not be as a prevalent in the funds, but deferred revenue that you would see, interest payment that comes under your deferred revenue. Basically deferred, it means continuously it will receive it. If the fund invest in bonds, of course, so that bonds offer interest payment, regular interest payment on investment, so that you can treat as a, means you need to just it's from investment perspective, it's kind of one time investment, invest one time and get the return on regular basis or every month, so that becomes your deferred revenue basically. All right, so bond interest payment or loan obligation interest payments and all. Then owner's equity, under owner's equity you would see different segments. So in private equity will not have preferred stocks or common stocks, but in normal business you would see that common stocks or that preferred stocks or maybe other bonds and all to the under equity, common equity type. But here under equity we only see that investor initial capital, means contributed capital, and withdrawal if you see anything as such, so that you would see, means here under equity you would see capital raised minus distributions plus additional capital plus reserve capital or cash, that you would see on private equity statement. But preferred statement and common stock you can see it, you can, means this you would see on that public limited or private limited companies statement or balance sheet. All right, retained earning reflects the cumulative profits earned by the fund that have not been distributed to the investor. It includes both realized and unrealized gain. If the fund has any realized and unrealized gain, so that fund treat as an retained earning. But anyways, if you see the gross or whatever it is, let's say realized profit or gain, so that we actually add in capital, and if you see realized or unrealized loss, basically that we debit from the capital. So it means capital it will basically depreciate if you see any losses as such. All right, and here you would see lots of questions around it, why we prepare balance sheets, or what is owner's equity, what would be the liabilities that we record it in the books of fund, or maybe you would see question around, let's say, what are the components that you would see on balance sheets, right? So you would see lots of question around it. So I have sent these documents in the group, you can go through it once again, right? So easy things that we have explain all of this in easy way, just go through it. And then additional point basically, which is for again balance sheets, it's provides snapshot of the financial position, right? Formula again, asset is equal to liabilities plus owner's equity, and then the balance sheets provide a comprehensive view of funds financial health, right? What it owns, means payables or receivables, or again that remaining value that you can say. And finally it essentials tool for investors and other stakeholders to assess the funds ability or liquidity and overall financial strength. Now I'll give you again, or we'll discuss few things around it, right? So this was about your balance sheets, so that you know it now, what is balance sheets, why balance sheet is important, then what would be the components or how your balance sheet looks like, and why we prepare it even, right? You know that even. But now I'll brief about, flow. It means how this flow works in your fund accounting books. Let's say if I talk about Geneva, how this works. See, note it down all of this information as well. You will not see this information in your notes, right? So note down with me. Process flow. Process flow, it means flow of accounting and all, where that balance sheets and all this, comes in picture. First, what we do, you would see different, transactions which we recorded in the books of fund. So basically your first investors come into picture. Investors come into picture, right? Investors, they appoint one fund manager, or maybe they can appoint one fund, or maybe investors, or you can say fund managers, vice versa. So depends on the structure, right? Investors and fund managers, they come together, they form LLP. LLP, it means limited liability partnership. If you see more than two two counterparts of person, if they come together and if they start any business, then they can go ahead with LLP. Why LLP? Because it's a legal entity. It's a legal entity. It's mandated to open that. Why? The reason is, if you don't have a LLP, then you cannot accept cash from the investor. So basically, investor contribute cash as a capital, right? Investor contribute cash as a capital. So it means cash investors, or the transfer, or cash, you can say, investors will transfer to the LLP, and that's what LLP, it should be registered. All right. Then LLP, it means fund manager, or let's say general partners or the other counterparts or fund promoters. So they'll establish legal firm, and open bank accounts. Open bank accounts. It's mandated to open bank accounts. If you don't open the bank accounts, as I said, you cannot, let's say, I want to work as an investment manager. Only I can provide you advice, but I cannot ask you to transfer your money in my account for investment purpose, so which is not allowed, right? And that's what it's mandated to open LLP. But if I take it that, then it will be like a loan. Then legally, then for example, let's say if I lost that money in capital market or any of the investment instruments, then you can legally file case on me. But if you open legal entity like LLP, if you lost entire value of investment, then case will be on LLP only, not the fund manager or general partners. So that's what that LLP creation or establishment is important. If you don't establish, then you can of course you can raise fund at your individual level, but you would be in risk basically. All right. So you need to open the bank account. So once you open the bank account, you need to also open the trading accounts as well. Trading accounts. Your question would be like, so why trading account? See, if you don't open the trading account, then how will you invest money, right? How will you invest? If you want to purchase securities, of course you require a broker account now. It's not a 18th century where you can actually purchase the physical securities and keep that with you. No, right? If you want faster transactions, then of course you should go ahead with the digitalization only. So we have a trading account system, so where broker offers trading account, right? So you can open trading account. So that trading account you can link with the demat account. Now again question is like, who offer this demat account? Of course NSDL offers that demat account, CSDL offers that demat account. Your question would be like, sir, at international level, so let's say if I want to invest in US, see they have their depositories as well, American depository receipt, or American depository, let's say limited, European depository limited. So they have it. So each and every country they have their depositories. But for in India, so we have NSDL. And NSDL basically works for Nifty or NSE market, right? CDSL works for BSE market. We have two different markets. Apart from that, we have other different markets as well. But basically, these two are popular one, right? NSE and BSE. NSE means National Stock Exchange. BSE means Bombay Stock Exchange. So you need to open account with them as well. All right. And once you have a trading account, see, trading account, as I said, broker offer that facility. There are types of brokers. One is discounted broker and another one is interactive brokers, interactive or prime brokers. Prime brokers offer more facilities like margin, funding, additional funding, collateral securities, or security lending and borrowing. If you want to borrow security, borrow on security, or lend your securities, if you want to do that, of course, why we do it, that's a different story. Because if you want to leverage out, leverage out, it means if you want to gain more apart from market capital gain and all, then you can participate in security lending and borrowing. But yes, discounted broker, it means Zerodha, which is discounted broker, which, or you can say it's a small brokers, right? When we say discounted, it means it's a small brokers with limited capacity. And if we say, let's say interactive brokers or prime brokers, so that becomes your brokers with high capacities. So that brokers has a high capacity basically. All right. So here the point is, so you need to, means fund manager need to, or that entity need to open accounts, and once they open the accounts, so it means in that entity will get the access to buy and sell the securities. NSE, so they can go in NSE market or maybe OTC market. OTC, it means over the counter market, or maybe they can go in the loan market as well. Why they'll go in this market? Because to buy and sell the security, or basically which is for investment purpose, I would say. If you see, this investment nature is only investment, right? So that investors and limited partners both are looking for investment in different financial instruments. It can be equity, it can be bonds, it can be T-bills, it can be, let's say, term loans. Basically, the investors, general partners, or maybe let's say investors or fund managers, they are looking for investment into all of these financial instruments in different markets. But for that investment, you required trading account and bank account first, where investor will transfer funding, cash in bank account. And once you have a cash in bank account, then you can transfer that cash to the trading account. See, in this modern accounting, we don't prepare the trading book, right? We of course maintain that data, but we don't prepare it at the moment. We just prepare it income statement. So it means now we have a digital trading book. So broker actually prepare it and maintain for you digitally. Just you need to go and download the statement, just download it and check the gross profit and gross loss. That broker prepare it. All right. So here then fund manager can again check the monitor the market, or check the market, and accordingly that they can deploy the fund. All right, they can deploy the fund. Now your question would be like, again, so why we need a demat account? See, if you want to hold the investment, hold it means if you have decided to do the investment in securities for a long term, if you have that purpose, then you require demat account. If you have purpose to hold the investment, then you require demat account, because on T plus 1 day or T plus 2, which is settlement cycle, right? In India, we have a T plus 1, and in US and UK, they are now working on T plus 1, but I don't know how long it will take. They're testing and they're checking so many things. But India, they have implemented it. So now we have a T plus 1 settlement cycle. But if you see here, it will means on settlement date that security will receive in your demat account, and that's what you require demat account basically to hold the securities in your demat account, right? Security, that means it's a inventory that you can see in your demat account. I'll show you in one of the session how it looks like and all in demat account. But yes, all your securities, if you have purpose to hold that securities, so it means you require demat account. Basically it is a movement of securities from trading account to demat account. When you purchase securities on trade date, securities would be on your broker statement only, that you can check it on under positions. But on settlement date T plus 2, that security it will transfer in your demat account, and this is why you required demat account as well. So now think from a accounting perspective. What data you required? You required holding information. Right? Why holding information? Because there would be different corporate actions as well, right? So you might see, let's say, conversion of bonds into equities, or maybe redemption of bonds. So you might see different situations or restructurings on investment. You required trading details. It means you required broker statement for what? For positions. It can be for loan positions, derivative positions, or maybe swaps. You required that, right? Then what about bank statement? Anyways, whenever you purchase securities or whenever you take any position, of course you will utilize cash first, and that's what your cash statement, it should tie with the trading and demat account. So that's what you required, bank account statement as well. But when the investors make a payment, see, they'll not directly process payment. So they'll process payment through security purchase agreement, or maybe LPA, that you can call. LPA, it means limited partnership agreement. So they'll sign agreement first. Let's say this investor decided to invest this amount, a fund manager decided to invest their contribution as well. So total partnership capital would be 1010. So that 1010 you would see here, right, as opening balance, and that's what you required cash statements. Now think from accounting perspective. You required investment details, you required statements, you required position details. So your job would be to evaluate all that: positions, demat account holdings, and bank statements. Additionally, you need to also evaluate security purchase agreements, or you might see additional letters as well. See, original agreement you cannot modify every time. Original agreement, so this becomes your original agreement or main agreement, you cannot modify every time. Why? The reason is, when you modify it, you will have to appoint legal advisor, so they'll charge their expenses. It will take time. So instead that, why don't you, if you want to amend anything, so just create additional letter and then send it to the investor. Simple. So they'll check it, verify it, and then send it to you back. So that's what you can create, that additional letters and send it to your fund manager. So maybe fund manager can send it to the accountants to verify it and all. So that becomes your side letter. So it means now from accounting perspective, you required side letter, limited partnership agreement, cash statement, trading account statement, or demat account statements, or any other investment statements. If you see, you need that, or you require that to create a projections in the books of account. All right. So you required all of that information. To create the accounting entries or to create the accounting records in the books of account, or to create a profit and loss account statement, or to create a balance sheets, you required statements like bank statements, trading account information, demat account holding information, then fund transfer information like LPA or additional later or side later as such, that you can say, right? So that information you required it to prepare your financial statements, and this comes under your data processing, because you would see different teams where they work on it, right? So our processing, don't forget this flow. See, this flow is important. This flow is very important. I'll again chart it out few things. Please take a screenshot if you haven't, or note it down with me. As I said, I don't have a notes for this flows and everything. All right, so you might see lots of things like this, but you need to note it down with me only. So I don't have any, I cannot chart it out all of this information on any documents. All right, so take this or chart it out this flow quickly, or take the screenshot at least and confirm me. So I'll again draw a few things, so that will complete, we'll try to link with why we prepare and how we prepare this or things or your countings and all. Investor transfer money to the bank account, designated bank account, then fund manager, you transfer that amount from bank account to trading. So basically we integrate bank account in trading account or broker sites, and then we utilize that funds to purchase securities from the market. So once we purchase that investment, if you want to hold it, then demat account is required. So you can open the demat account with designated depositories, and then transfer that funds to the demat account. And then what about brokers? Brokers provide trading account and even trading support as well. If you need any trading supports and all, you can reach out to the brokers. Broker will help you to place orders also. So this is how your flow works. But now I'll chart it out another flow from a fund accounting.
Shivraj, one question here.
Yeah.
Like, I just want to understand what is the actual difference between demat and trading account. So, trading account we are referring something to as nostro account.
No, not nostro. It is just a trading account. It means broker provided facility to access the market. It is for a daily trading, so buy in and buy out. So you can, if you want to do intraday tradings and all, so you can do it from
But
a
these
trading
kind of
account.
facilities we are getting in demat accounts.
No, not in demat account. Demat account won't offer any facilities. Demat account is just for a storing securities. That's all. It's a wrong assumption. Demat account, it is for a holding securities. It means you can purchase and hold it in your demat account.
Okay.
So demat account is basically for holding securities in digital form, dematerialized form.
Maybe in general term we are referring both the things in the same way, but in more technical aspect, trading account basically do the trading part, buying and selling of securities, and demat is just holding security in the more
Yes,
digitalized form.
exactly. And here, again, in fund business, your banks plays, your custodians play your bank's role actually, because custodian integrate the demat account and trading account in their system, and then they provide their another account to you, so that you can integrate in your internal accounting systems for a better tracking purpose. So it means custodians like Street, they offer that treasury service or cash management service, right, to the funds, and custodian hold the entire funds on behalf of fund manager, and they work as per the instructions of fund manager. So that's what your custodian will come into picture as well. But yeah, so only, as I said, custodians work as a bank. All right.
Right.
So okay, so can I erase this, or have you noted down somewhere? Quickly just confirm me, or else take a screenshot immediately. Let me see if I have any other.
Boom.
Done, right? So can I erase this one, guys? Come on.
Yeah. Yes. 1 second, Shivraj.
Okay. Quickly confirm me once you are done.
Yeah, Shivraj. That's right.
Okay. So now see the fund accounting project structure, right? So you know it now. We means there would be different counterparts. They will be in picture. But what about the linking? How we can link all of this with the fund accounting? So let's take the example of your trading account, because trading account plays crucial role. Trading account and even custodian account. As I said, custodian, it means at a fund level, it is mandated to appoint one bank as a custodian where they can take the custody of cash and investment, and they help you to even manage your financial transactions as well. All right. So on a daily basis, what happen? Fund manager, purchase some certain securities, or maybe fund manager can invest into different financial obligations like ABS, MBS, CDO through custodian, and that's what you would see. Trading means brokers and custodians both plays crucial role in this business. So on a daily basis, what happened? Both the institutions, let's say your fund number is GMT 123, so they, of course, broker and custodian both maintain your fund number as well, so they generate this statement, right? Generate statement. Now if you talk about statement, it means statement should be, if I talk from a custodian side, it would be your holding statement, then bank statement, bank statement consists of your buy, sell, expense, income, transaction details, including capital as well, if you received any capital as such, capital or distribution. So basically bank statements provide you information for everything. And if I talk about from a trading perspective, so you can see that buy and sell and tradable cost, tradable expenses that you saved, right? So daily basis means your teams can generate these statements, or maybe now here if you see admin team can generate statement, or maybe they can access the different brokers, let's say State Street Corporation, JP Morgan, or maybe CT, so that they can access the sites of actual that broker sites, and they generate the statements for that particular fund. And once they generate, they can directly upload trades statement or cash statement, trade statement or cash statement on, again I'll have to erase this one, so note it, you can note it down, or else I'll do it here. So on they'll upload this on so you might see different applications like recollector basically it's automation, right? So that helps you to pull the statements from the different platforms. Recollector will collect these statements, right? And then you might see other applications where scheduler, so that convert entire applications into one format. When we talk about format, it means we are talking about this format. If you see, this looks more, we are talking about this format, this one, buy and sell, right? See, every broker will have a different formats, correct? And you need a data actually to convert that into Geneva format or as per Geneva and all. So basically you would see systems, different systems, or different, things to convert that. See, every organization, they have their technological capabilities. So you might see such names as well, like, but yeah, recollector is common one. So across industry, they're using it to collect the data from the different brokers. Scheduler, it means, so that helps you to convert data, or I would say like upload data on system automatically. So this application actually, it's between your, it's between, IBOR. IBOR basically investment books of record. So it means broker and custodian, and ABOR. ABOR, it means accounting books of record. So scheduler actually pick up the data, or help data, I would say, to upload data from IBOR to ABOR. ABOR, ABOR, it means your fund book actually. So here I'm talking about, let's say, Geneva, right? So this will upload on Geneva, and once the data is uploaded on Geneva, so it means here you would see, so Geneva will the scheduler will upload the data, basically your trade date, settlement date, quantity, price, and the other input like any tax or cost, if you see any expenses, if you see as such. And apart from that, so here fund admin team will take care of asset setup. If you see any security is not set up on, let's say, Geneva, then they'll set up that security on Geneva on the basis of statement or information which is available. Of course, they'll check the other source of informations like Reuters or maybe Bloomberg, to just cross verify security ID and all, because if they don't map proper security ID, then your investment, it will not reflect. The reason is mapping, that you would see where your fund will be mapped with your securities. So securities that you can map with fund basically, right? So that's how, if you don't map it, then system will not be able to provide you the outcome, desired outcome, I would say, the value of total assets and everything. So system will not calculate the aggregated value then, and that's what you need to upload, or you need to update the right securities under that particular fund only. But yeah, so here you would see technical things like this. This is more technical part, but yes, you will have to understand this, because in trainings, most of the stuff that we discuss technical stuff only, not the theoretical one. Admin team, it means basically here you would see multiple other names as well, like asset onboarding, or fund onboarding, or admin team, or maybe different teams, like let's say KYC team. Even sometime you would see that, where they check the funds documents like agreements, LPs details, director details, funds PAN number, tax number, address, and everything, so that they can update in system, right? Because we'll have to update all that information in accounting system. See, as a fund accountants, we are responsible for ABOR, but if you are at a custodian level, then you are responsible for IBOR. IBOR, it means you will work in investment books of records, right? But at a fund level, you will work in IBOR, accounting books of record. So basically here your scheduler, or maybe you can generate any other tool as well, right? Or dashboard or API keys, so that automatically tool will help you to get the information from scheduler and update it in the internal accounting system like Geneva automatically. So there are two ways. One is you can book the trades, you can refer the statement, and you can book the trades manually even, because when I was part of this trade processing team, so we used to do it manually, but later on I developed that macro, so we used to book the trades through macro, right, which is called trade blotter. So we used to call trade blotter. So you can upload all the information, trade quantity and everything, and upload it on system. Why this uploading is important, we'll discuss that as well. But before that, before go ahead, I would like to ask you just take a screenshot or maybe just quickly note it down flow, so then I'll take you ahead. Quickly do it and confirm, please. Hello, are you done, guys?
Yeah.
Okay. Then we were talking about scheduler and something. All right. Okay. So if you see now here, scheduler will book the trades, or maybe you can manually book it, or you can also take the help of, as I said, technical tools and all to upload the trades on, let's say, Geneva. All right. So after trade booking, so in Geneva only, Geneva, it means it's an accounting tool. So you would see different things. So trade processing is the main one. Trade processing is the main one, right? Before that, of course, you would see capital activity, which come again, we record it under Geneva, right? Or maybe let me just quickly do it in this way. Under Geneva, you would see capital activity first, because we received capital first only. And then you would see investing activity. Investing, it means trading, so which we have seen earlier, buying and selling of securities. Buying and selling of securities, but we'll call it as a trade processing in this fund accounting business. Trade processing. Trade processing. And under trade processing, now you would see multiple teams. The first one is your income processing. Income processing. Basically, they take care of dividend booking, interest payment, and other income. So their main job is to set up accruals, and Recon. See, if you want to set up accruals, then you should have a security in your place. Simple. If you don't have a security, then how will you set up the accruals? Right? When we set up the accruals, of course, we update the security ID. So it means we are assuming that you have this security in your demat account, and that's what you would set up this accruals. Right? So here you might see different team or separate team where they'll take care of only income, processing part. So they'll book the dividends, they'll book the interest payments, they'll book the other income if you see anything as such, Recon. And once you set up the funds, let's say annually, yearly, quarterly, or maybe if you have any new fund in place, so that we can set up the accruals for all of this, transactions. Then other one is corporate action. So you would say separate team for corporate actions, or maybe depends on the that accounting part. If you have end-to-end accounting, then one guy will work on all that activities. So here your main job would be to perform reconciliation, recon of corporate actions, and check the pre and post CA impact. impact on NAV or holding. Note it down with me only. It will save our time, right? So corporate action team or corporate action task, you can say. So main job would be to check the pre and post corporate action impact on NAV. You would see different actions like mandatory, voluntary, many more. So in private equity, there would be restructuring and redemptions or conversions and interest payment. That's all. In a hedge fund, you might see different ones. Apart from that, you would see other like pricing of securities. Right, pricing of securities basically we have different levels. Level 1 securities, level 2 securities, and level 3. Level 3 it means risky securities. That doesn't mean there won't be any risk involved in L1, but basically those would be listed securities, listing on reputed stock exchange. Basically derivatives or stocks that comes under L1 and L2. L1 and L2 both are same with little change. We will discuss that in that pricing session. When we have will have a pricing session, we'll discuss that. And L3 basically risky one, pure risky one. That security information is, for example, let's say ABS. Of course, will not have that security information available. ABS security information is not available with us. Then how will calculate or compute the price of securities and all? But yeah, so you would see that team as well. So where you need to do it or update the pricing of securities in the books of account. All right. Income processing, corporate actions, pricing, and then apart from that, so not under investing, but under I would say Geneva only, so that you can create a expense team. Expense team for different expenses, fixed, variable. Incentive fees is variable, management fees is also variable. Sorry, variable, but admin, legal, and other expenses, so you can fix it out. Even the management fees also sometimes you can fix it out, so that depends, right? Fixed, variable, and sometime you would say direct expenses, right? Direct expenses. So basically that expense team will take care of accrual setup based on the nature, fixed, variable, and direct. So that would be their job. So under Geneva, he would say separate team for expenses where they'll take care of booking part, right? Where they'll take care of booking part. But under trade processing also, sometime you would see different teams for different products. For example, let's say OTC products. So you might see OTC team where they take care of swaps and maybe bonds, right? Or sometime you would see separate team for bank dates. Bank date, it means for loans. For equity market, normal trade processing team will take care of it, right? For a money market also you might see different team where they'll take care of processing of money market instruments under Geneva. So that depends on the size of the fund as well. All right, so please note it down, this one as well. So we'll have to again one more time erase this and chat it out, because we haven't reached to the balance sheets or P&L or maybe let's say NAV computation. We are mid of this, so note it down quickly. Under Geneva you would see different teams or maybe let's say different activities, because we have already charted out how your investments received and how different accounts come into pictures and all. So capital activity you can create, under capital activity you can create investment activity, and under investment you would see corporate actions, income, and pricing part, so that you need to update, right? under trading team or trade processing team. So might be you would see different specification where for a different products, swaps, bonds, banks, bank dates, money market instruments and all. And you can also set up the expense team where they actually set up the accruals for expenses like fixed, variable and direct. And apart from that, of course, income, under income, interest and dividend, which is a plain one. So that we set up actually, right? Note it down and just confirm. Are you done with note making, guys? Come on. Yes, no. What happened? Am I audible?
Yes.
Next time I would expect quick response from everyone. Don't just wait. If you don't confirm, then
Yes,
how
Shivraj,
would I
I'm done.
know then? So you're done with this. So can I erase?
Yes, yes.
Yes.
Thank you. So again, under Geneva only. So one side that we have seen where different teams, let's say asset onboarding teams, they set up the funds or securities. Then trade processing teams book the trades in the system, right? Again, Geneva, because we are discussing about the EBOR. EBOR, it means accounting books of records. Apart from that, we have seen like corporate action team or income team or expenses, that also will come in picture. So you might see other teams as well. But so this data processing, that for Ms. previous slide we charted out few things. So that comes under your data processing, right? So that comes under your data processing. And now your NAV job come into picture. NAV, it means basically your job is to fix the financial statements. How you can fix it if you don't have a data? Let's say for example, corporate action was announced on XYZ securities and that guy forgot to book it. Let's say there was a different team who are taking care of that booking part or validation part or adjusting records, corporate action records, but that guy forgot to record it. So just imagine if that guy forgot to record it in the books of account. So even if you prepare NAV, so it will not tie, right? So the data processing is a foundation. So that data processing or data or whatever data they update in the system, that is a foundation for NAV calculation. All right. So now hereafter your NAV journey, which starts. Even though if I take the example of let's say security pricing teams, price was 100 for XYZ securities in market, but that guy updated 120, right? So it means if you received subscription and if you confirm, go and check the report in 2015, BNY updated incorrect price basically in the system and that affected a lot. So it means it was a huge impact, around 1500 crore something investment got affected due to the price error. That also happened, and that's what it essential job of that each team to ensure that they have updated each and every transaction and details in the system. So that information you can refer it. So that information you can refer it for NAV computation. And when you compute NAV, what you required, now see this, you required data. You required data. Data, it means trade data, corporate action data, corporate action data, then income data, expenses data, pricing data, and your capital. Apart from that, you might see SBL, security borrowing, lending. If you have anything as such, that information is also required, but that becomes a separate process or department, so that is also needed. And if you have all this information, then your job is like to calculate aggregate value. As I said, aggregate value. So periodically, depends on your accounting cycle, calculate the aggregate value, and then your NAV journey starts. Post journal entries. Post journal entries for trades, corporate actions, income data or expenses, pricing, or any capital, let's say call or distribution, whatever that you would see. So you will have to post journal entries in the books of accounts. So you might see separate team for journal entries as well. There are institutions where still they calculate all of these balances and post journal entries in Excel, and in the backend they upload that journal entries on Geneva system. Why journal entries are important, we'll see that as well. So journal entries, if you prepare journal entries, so that journal entries help you to prepare the group ledger. Group ledger. I'll show you that, not today, but I'll show you that group ledger as well, how that group ledger looks like. Group ledger, basically, I'll just brief about it. Group ledger, it means nothing but it's a separate group that you can create. So it means, let's say for a buy in a trade book, you would see buy and sell. So you can create one ledger for buy, you can create one ledger for sell, right? So group ledger. So your group would be cash book basically, and ledger would be your this one, ledger 1, ledger 2. So you can create a multiple ledgers, and let's say there are 1,000 transaction under sell, so you can record 1,000 transaction under sell only. Let's say there are 1 lakh transactions under buy, right? 1 lakh. So you can record all the transactions under buy only. So that becomes your group ledger, right? So group that ledger. All right. If you see 1,000 transactions under cash book, you can record that 1,000 transactions under cash book. So that's what your group ledger come into picture. So group ledgers basically help you to prepare a trial balance. And without trial balance, how will you prepare balance sheets and income statement then? And if you have an income statement, trial balance, then basically that will help you to prepare income statement and balance sheets. Your question would be like, so what about then NAV? Yeah, so basically you can, on the basis of your balance sheets, you can prepare NAV statement. Net assets, value of the fund. Now you hope you got it. So how process is long, and why this, see in the back end to calculation of NAV, it means if you want to compute NAV, so trust me, you will have to work with all such a teams, brokers, custodians, fund managers, trade processing team, corporate action team, income team, if you see any as such, pricing team, then capital, cap stock activity team. If you see there is any different team for journal entries and all, you will have to work with them as well. But anyways, computation of NAV, it means system will prepare